Welcome to Financial Freedom Principle. My name is Sezair, julien. A quick review. We know an income statement has three parts in it: the income, the expenses, and the cash flow, or they call it net income. What's left after all the expenses are paid. Okay. Today we're gonna take an example of somebody who's making $3,000 a month. Okay. We say income $3,000 a month. In that $3,000, we know 30% of that is going to taxes, benefit, and other things like 401ks. 30% of $3,000 gonna be around $900. Okay, that's it. Taxes, right? Benefit. And what's left is your take-home pay. This is what you get after they remove taxes. Your employee, if you are the employee, once you finish paying taxes and everything, this is what's left is your real income, right? That's the real income, real cash. Okay, so that's $2,100. So because you are an employee, your income come to the active category. So that's $2,100. This is an employee who doesn't have any investment, who doesn't have any businesses. Simple. Okay, so $3,000, $900 tax and benefit, $2,100 in real income. And with that, this is where we need to be smart, right here in the expense category. So if we look at this, $2,100, that's what they have coming in. So this money, income, is gonna be, we're gonna use it to pay expenses, but we want to have some cash flow left to see where we stand, what's our wealth at the end of the month. Okay? If you go to church, most likely you pay some tithe. If you don't, that means you don't pay anything. But if you do, let's say you do, you pay 10% of that to the Lord. Okay? You pay 10% of your income to the Lord. So what's 10% of $2,100? It's $210 goes to the Lord. Okay? So if you have a student loan, I don't know if you have any student loan or not. So if you don't, let's say this person doesn't have any student loan. Okay? They work $15 an hour or $20 an hour. They said, you know what, I'm not gonna get a student loan. They don't have any student loan. Do they have a mortgage or rent? This person don't have a mortgage, but they have rent. The rent is $900 a month. Okay? $900 a month. That's reasonable for rent. Bills. They have to pay electricity and gas because the tenant, the landlord cover the water and the sewage, so they don't have to pay for that. The bill for electricity and gas come to about $300 a month. Average $300 for $150 per month for electricity, $150 a month for gas. That's makes it. Food, they eat about $500. Okay, in food a month. This is very. So let's say that's a lot of money. So let's say 400. Okay, but some people might spend more. Okay, you might be yourself or you and three people in the family. Let's say 400 makes sense. $100 every week. That's barely get by. So this is an example. We take that. For clothes, let's say for the month you spend about $50. Because things are tight. You can't spend that much every month, but we spend $10. Do you have a car loan? I don't know. But you might have a car loan. There's a lot of good deal out there. You might get a good car for $100, $150 a month. Okay, if you have a car loan. Cell phone. That's a lot of money, but we said, all right, for cell phone, we pay $100 a month. You are conservative. Okay? Do you have a boat? You don't. This person don't have a boat. They don't have any personal loan. They don't have a second car. But what they do have some credit card. So they pay about $25 in credit card a month. $25 a month. Jewelry, they stay reasonable. Okay? So now, if we look at that, we can see how much they expend here. What are the expenses? How much they spend?
Oh,
Okay, so our total basically is $1,085. $2,085. Now we call it math in public. That's why I say don't do it. Okay? So now if we look at the cash flow or net income every month, it's $2,100 minus $2,085. They have a positive cash flow of $15. Okay, 15. Let me see, 15. That's right? Yeah. Okay, 15. So $15. So if we understand their wealth every month, it's $15. Okay? What if they said, oh, well, you know what? We need to increase that. To increase that, you can, but what can you do? You can either look at your food, how much you spend in food, your bills. I don't know if they're gonna bring it down, probably not. But you can talk to your landlord. Say, hey, landlord, I think if I need a discount on the rent, I can only pay $800. I need to look for another place. Or you can bring it down for me because I've been paying on time. I've been doing everything on time. Can you bring it down for me for $100? All right. If they don't agree on 100, but 50 is more likely, $50. But you see, if you bring that down to $50, you can bring that up, right? Bring this to $65. You see. Now, what can you and I do with that information? We say, all right, we are positive, which is great. That $15 we have positive, right? As we run on a profit right now because we are positive. That profit, if you continue with us, you'll see what can you do with this. How do you invest it? Okay. One thing I want to before we go, one thing I want to bring your attention is the flow of money, right? The flow of money. The money comes from your job. Okay, and it goes to your income category. Your income category is active because you have a job, you have to sell your time for money. You bring it here active. You don't have any investment passive, or you don't have any portfolio income. You don't have any businesses. Okay, you don't do anything after your job. Okay, if you did, you would have something here. If we did, okay, so the money flow here, and then from the income, it flows out to the expenses, and then whatever left, if there's any, flows to your cash flow. This is what you are, where you are. You have positive every month by $15. If you multiply that for a year, you're gonna 15 times 12 is gonna give you how much you can save every month. This is your saving. This is how much you can save. Okay, this is your saving right here. So let's look at now the flow of money. Job to your income statement, to expenses, and then if you have anything left, it goes to your cash flow, it goes to your saving. Okay? So that, which is good. So the money from your expenses, where does that money go? This money go to the income statement of the business you own. For example, your rent would go to your landlord. Right? This is the income statement of your landlord. Right? You see? In your landlord income statement, the business, the landlord is the business, you will have your rent in here. Your rent will go in there. Where are your bill going? It's going to the utility company, right? Right here. This is the utility company. If you go to the income statement of the utility company, you find all your bills here. Your food, where does your food go? To the grocery store. That's the income statement of the grocery store. You'll see it there. Your car payment, where would that go? Car payment would go to the bank, right? So you see in the bank income statement, you'll see your car payment in there. And if you have student loan, it go to the student loan company. If you have when you buy clothes, it goes to the clothing company. So if you can understand this, your expenses is income for somebody else. You see that? Your expenses are income for the businesses that you own. If you pay mortgage, it's go to the mortgage company. If you rent, it go to the landlord. If you have credit card, it goes to the credit card company. If you have car loan, it goes to the car loan company, and so on. This is where we want to be. We want to have that income coming in as passive income. Next time, we'll see somebody who have active income and passive income. So again, this is Sezair Julien. Don't forget to subscribe to the channel so we can bring you more. See you next time. May God bless you.